We are now joined in studio by Dr Azar Jammine. He is the Director and Chief Economist of Econometrix. Dr Jammine, thank you so much for joining us on The Globe. Now, before we look at the GDP data, let's first look at the global landscape and what it holds for the local economy. First up, developments in our largest trading partner in Europe, Brexit.
Brexit is very relevant for South Africa's economy because depending on the outcomes of Brexit and the impact on the UK economy, it can affect the South African economy because unlike many of the other European economies, South Africa has a favourable trade balance with the UK. The UK is a bigger importer of South African goods and services than most other European countries, and therefore if there's an unfavourable outcome with Brexit, it would impact proportionately more negatively on South Africa, and conversely a favourable outcome would be quite positive.
So how should we as South Africa be looking at the events that are unfolding there? Should we be looking at it as an opportunity or a risk?
I think probably both.
Okay.
And the opportunity really lies in the fact that if Britain is no longer as close to Europe as it was, it's going to look outwards to especially to its traditional markets. And you know, South Africa was at one stage the third largest destination of British foreign investment in the world. And still a lot of the foreign investment that exists in South Africa is British.
Now, Dr Jammine, we've seen global markets, including our local stock market, cheer the new US-China trade truce in recent days. Do you think that truce is going to last? Do you think it's a relationship that can withhold, can stand?
Well, as you mentioned, it's a truce. It's for 3 months, and we've got to see whether what follows this. There is no certainty that.
How important is this truce for especially developing countries like South Africa?
It is naturally very important because the prosperity or not of the Chinese economy depends very much on it. And China is our biggest single trading partner these days and is a big importer, like Britain, of South African goods, and especially our raw materials. And if China gets the jitters as a result of these tariffs being imposed on Chinese goods by the US, South Africa indirectly can suffer. And that's why, conversely, when news of the truce was announced, the rand gained so much ground. It also meant that all emerging markets actually experienced an increase in their risk appetite. And because the rand is one of the most liquid emerging market currencies, it benefited proportionately more than most of the others. But yes, it's via the impact on China's economy, and through that the impact that it could have on commodity prices and the demand for South African commodities.
Now, coming back home, we've seen the local economy emerge out of recession in the third quarter. Does this mean we are finally out of the woods?
No, it doesn't mean we're out of the woods. Frankly, whether we're in recession or not in recession is largely it's a psychological issue, but no more than that. The fact is that even at 2.2% growth, when you have a population that's growing at 1.6%, 2.2% growth will barely enable you to keep up with keep your living standards at the same level as they were before. And it's certainly insufficient to provide the jobs that are needed to prevent the unemployment rate from increasing further. But I suppose one should be grateful for small mercies that at least it was positive.
Now, what's your outlook going forward with regards to considering the inflation? It's ticking slightly up. Interest rates look like they are on an upward trajectory.
Well, in the shorter term, much depends actually on what happens to the international oil price and the rand. If tomorrow's petrol price cut can be sustained for a few months, this will provide a little bit of breathing space for the average consumer. But, you know, if you're really looking for significantly higher economic growth, South Africa has to address some key structural impediments to that growth. The most important of which is the level of education and skills and the quality of those that are coming out, because without that we will not be able to compete in a fourth industrial revolution. The second aspect that has really been hitting us home hard in the last few days is Eskom. And I fear that the resumption of load shedding, if it persists for another month or two, will have a devastating impact on business confidence and consumer confidence, and that in itself will prevent growth next year from picking up very much. I'm hoping that this situation is not quite as serious as many people seem to think it is. Eskom tells us, you know, we'll get out of the woods by March, but people are not entirely trusting of that.
Just speaking of Eskom, there has been a talk of, you know, the coal supply not being the greatest of quality, and that's why there's a lot of breakdowns in terms of their systems, where, you know, they're not getting the good quality that South Africa used to get through the mining companies. How do you think they can mitigate that? And there's talk of 5 years. As you say, Eskom is saying by March everything will be back to normal, but there is a possibility that it could be even longer.
Well, absolutely. There are many stories about coal that seem to be contributing towards the fray. The one is that the coal mines are exporting their coal rather than selling to Eskom, because Eskom is not in a financial position to pay them as much as overseas suppliers. There's also the question of wet coal and the quality of coal, and the quality of coal is said to have deteriorated to the point that it is now messing up the machinery in our old coal-fired power stations and causing those power stations to break down a lot more frequently than before, and that's also contributing towards the shortage of electricity supply. The third factor that is quoted is that the coal collieries that have now come into play are quite far physically from the power stations, and therefore we are now more reliant on transporting coal from those collieries to the power stations, and there are all sorts of logistical problems and industrial relations problems involved in that as well.
Now, today the National Assembly passed a report of the Joint Constitutional Review Committee recommending the amendment of Section 25 of the Constitution. What's your take on that?
Well,
and the impact on South Africa's economy?
I think the currency told a big story. After the revelation of us coming out of recession, 2.2% growth, the rand firmed from over 1370 all the way to nearly 1350. When this amendment was passed in the Parliament, it fell all the way back to 1370. That tells you a story. Essentially, what at the end of the day will really count is what kind of amendment is done in the Constitution. But there is a further aspect that bothers me, and that is that psychologically, you've had a sacrosanct Constitution that's been in place for 24 years. And suddenly you have the first incidence of tinkering with it. That's a very dangerous precedent as far as international investors and some local investors are concerned. They say, well, where is this? Is this the thin end of the wedge? Irrespective of what is contained in the amendments that we're looking at. And I think it is not conducive towards improving investor confidence, unfortunately.
We've seen President Cyril Ramaphosa with a team of leaders in government and in business going out globally and ensuring investors that this will be done within the confines of the law. Do you think that's not enough?
I don't believe that that is enough, and I think there's still a lot of suspicion and nervousness about what this all implies for property rights generally. I personally am not as alarmed by it, but international investors don't know South Africa as well as I do, and they are much more severely alarmed by it.
Dr. Jammine, what does all this mean for credit ratings agencies? We have no doubt been watching, this economy.
Credit ratings agencies at the moment have really got us on hold until the general election is out of the way. But the one thing that could, more than anything, actually disrupt our credit ratings is the Eskom story. And for that matter, state-owned enterprises more generally, but Eskom is such a giant in the whole story. The concern that people have is that the only way out for Eskom's problems will be a massive government bailout. We're talking about hundreds of billions of rand. And if that happens, suddenly, you know, it's not just government trying to finance its daily expenses, but government having to borrow money in order to just keep Eskom going, and that will cause the public debt to GDP ratio to balloon, and that is precisely what credit ratings agencies are looking at. And ultimately it could there is a real risk still that we will see a downward revision of our credit rating. For the moment the rand seems to be holding up, but I fear that that's because of an unwinding of forward cover positions that were taken out when the rand was very strong earlier this year. In due course it could be very vulnerable.
Now, unbelievably so, it's a couple of days before Christmas, and you know, the Christmas buzz, you walk into the shopping centres and your Christmas decorations are up, people are excited, walking through shops and doing their shopping. What kind of Christmas, what sort of Christmas do you think consumers and retailers are likely to face this year? Are we looking at more spending, or are people going to kind of hold back as consumers?
I think people will hold back to a significant extent. I think they're going to be much more cautious than they have been in the past. As I say, this load shedding has come at a time to send a signal: be careful, don't buy electrical appliances because you may not be able to use them. That doesn't mean to say it's collapsing. The economy is not collapsing, but it's just stagnant. It's not growing, and I think that's what we will see over Christmas. That the sales will probably, maybe eke out positive growth compared with a year ago, but certainly not be as strong as they were last Christmas.
Dr. Jammine, thank you so much for joining us. We'll leave it there for now.
It's a pleasure.
And that was Dr. Azar Jammine, Director and Chief Economist of Econometrix, joining us live in studio.